Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 strong buy high yield dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 companies that have a lot going for them. Not only do they have high yield dividend payments, we're talking over 7% yields on all of them, they also come in with a strong buy consensus from Wall Street, plus cost under $30 per share. A couple of them are actually under $20. Now we found today's companies using the TipRanks stock screener. Let me show you what we looked for. Found under Research Tools with the stock screener, I wanted to find stocks that trade on the 2 major exchanges, and I want a strong buy consensus, not just from all analysts, but from top analysts here as well. Of course, we want a dividend paying stock, so I'm looking at high or very high dividend yields, and I also want a outperform rating on the TipRanks Smart Score. Now, we can search a few different ways. I decided to go from the highest yield down. Of course, you can try out the stock screener for yourself over on TipRanks.com, and make sure you download the TipRanks mobile app as well so you can stay up to date with your favorite research tools on the go. Now let's get right into these 3 strong buy high yield stocks. First on our list today, we're taking a look at Rithm Capital. Trading under the ticker RITM, this is actually our cheapest stock today, trading at $10.87. The stock has seen year-to-date growth of 43% and has climbed 11.5% in the last 3 months. They do score an 8 out of 10 on the TipRanks Smart Score. And it is no surprise that Rithm Capital is found on a high-yield dividend list, as the company is a REIT, or Real Estate Investment Trust. Rithm Capital has been around since 2013, and they have operations at both ends of their business, both in mortgage loan origination and in mortgage servicing rights. Their portfolio leans heavily towards the servicing end, with 44% composed of mortgage servicing. The company is approximately $35 billion in assets and has returned $4.9 billion in dividends since their inception. Their next ex-dividend date will be coming up shortly after Christmas, on December 28th for payment on January 26th. The current quarterly dividend comes in at 25 cents per share for an impressive dividend yield of 9.5%. In their third quarter earning report near the end of October, Rithm Capital did come out with an earnings beat. Revenue of $1.09 billion grew over 19% year over year, and they reported earnings per share at 58 cents, beating expectations by nearly 20 cents. Their CEO noted that it was a terrific quarter for the company and that the firm continues to pivot towards their vision for Rithm 2.0 as they not only focus on their core business but other opportunities. The Rithm Capital stock does currently have 7 analyst ratings, and one of those came in just recently, with UBS initiating coverage on the stock with a buy. The UBS analyst initiated coverage of 9 residential credit mortgage REITs, saying that the decline in rates during Q4 should ease pressure on both book values and earnings power. And with 6 buy ratings and 1 hold, Rithm Capital comes in as a strong buy. The average price target is $11.79 for an upside of about 8.5%. Looking down below, we can see our list of detailed ratings. Our hold is from back in October with a slight downside, and the more recent rating coming from UBS has an upside of over 14%. Our second stock here is one I've definitely talked about a few times before, but it still is worth mentioning, especially when looking at high yield picks. That is Energy Transfer. Their stock trades under the ticker ET and is priced at $13.67 per share. Over the past year, they have seen growth of over 28%, including an 11.5% growth in the last 6 months. They come in with a 9 out of 10 on the TipRanks Smart Score. Energy Transfer is a major player in the North American midstream sector, and that is a vital segment of the energy industry that connects oil and natural gas producers with their end customers. Energy Transfer has operations in 41 states, plus international offices in Panama and Beijing. The company's core operations include the transport, storage, and terminaling of crude oil, natural gas liquids, and refined hydrocarbon products. Now, Energy Transfer did have to cut their dividend back in 2020 during the pandemic, but ever since they have been steadily increasing it back to impressive amounts. Their current quarterly dividend comes in at 31 cents per share for a dividend yield of 9.32%. That is nearly triple the sector average. As you saw on the stock chart, they have been seeing some great growth this past year, so it might be surprising that they've actually struggled to exceed earnings expectations for the last few quarters. In their last quarter, they did come out with mixed results, missing on earnings but beating on revenue. They reported revenue of $20.7 billion, which beat expectations, while earnings per share of 15 cents came in well below. However, the company did hit quarterly records as far as natural gas liquids and crude transportation volumes were concerned. Despite the miss on earnings, we've seen several analysts increase their price targets following that report, one of them being a 5-star analyst from RBC. Scotto said that with high-return growth projects, accretive acquisitions, and integrated asset footprint across hydrocarbons and basins, we believe ET can generate significant cash flow in coming years. Overall, the Energy Transfer stock comes in as a strong buy with 5 buy ratings and 1 hold. Analysts' average price target comes in above $18 per share, which would be an upside of over 34% for this coming year. Down below, you can see our RBC analyst there with an upside of over 39%. Of course, on the low end, we have a hold rating at 2.7%, but all the rest are pretty much 32% and above with a high end at 68%. And third on our list is another stock I have chatted about before, that is Enterprise Product Partners. Their stock trades under the ticker EPD, currently priced just above $26 per share, making them our most expensive stock on the list today. Over the past year, they have seen growth of 19%, and in the last 3 months have actually been trading fairly flat, down about 1%. They currently score a 10 out of 10 on the TipRanks Smart Score. EPD is another company in the midstream sector. And with a market cap of $58 billion, EPD is one of the continent's largest midstream players and one of the largest public partnerships on Wall Street. The company has a continent-spanning network of oil and gas transportation assets, including 50,000 miles worth of pipelines, 25 fractionation facilities, and 20 deep-water docks. On the dividend side of things, Enterprise Product Partners just crossed a major milestone. With 25 years of consecutive payments and increases, they just achieved Dividend Aristocrat status. And with the current quarterly dividend of 50 cents per share, they have an attractive dividend yield at 7.61%. They did come out with mixed results in their last quarter, with a miss on earnings but beat on revenue, with third quarter revenue of $12 billion beating by over $370 million, while earnings per share of 60 cents fell 4 cents short of estimates. The company did announce that they're planning $3.1 billion of new growth capital projects in the Permian Basin. Following that quarterly report, we did see several analysts reiterate their price targets, one of those coming from Citi, who increased their price target, noting that new spend on capital projects. They noted that while such a large slate of growth projects announced all at once caught some investors by surprise, these projects should be high return and well contracted. The EPD stock gets a strong buy consensus with 8 buys and 1 hold. And with an average price target of $31, upside potential will be 20.76% for the coming year. Down below, we can see our most recent ratings. On the low end are 1 hold with an upside of 6.5%, a lot coming in right around that 18% mark, and a high-end price target with 33% upside. So there we have 3 stocks, all with high dividend yields and a strong buy consensus from Wall Street. Let me know your thoughts on these 3 companies, which catches your eye the most, and what other high yield dividends do you love? Let me know in the comments. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.